Top Picks is brought to you by Questrade, where you can trade stocks from 1 cent and buy ETFs for free.
And we have those top picks right now with David Burrows. If you've followed the show for a while, you know that David likes biotech in the U.S. And here we go again, IBB, this ETF that holds a basket of them.
Right, so we run a fund that invests in macro themes around the world, across asset classes, and it's long short. One of our core themes for the last couple of years has been biotech. And really what you're seeing is all of the investment that came out of the genetic mapping starting to come to fruition in a lot of companies. So all kinds of new products coming down the pipe in companies that are not that terribly expensive. Some of them, of course, are, and there's risk in lots of them. The way to get broad exposure to this sector without taking the binary risk that comes in some of the earlier stage companies is to buy the ETF, which gives you a basket. And there's a number of different ETFs. IBB is one of them. It's very liquid. You can enter or exit very easily, and you don't take a lot of company-specific risk by buying this. So we think that this is just a great way. There's lots of great individual companies that we invest in our other strategies, but our ETF strategy has done very well, and this has been a contributor.
The biggest holdings here, Amgen, Biogen, Gilead, which was a past pick of David's. Now, Apple, which comes out with earnings on Monday. Here's the top pick as well.
Now, this sounds like a bit of a kiss your sister kind of a pick, but look, here's the thing. We believe the biggest theme in this market is consumer globally, and this is probably the greatest consumer products company there is on the planet. This is a company that is very inexpensive. It trades at 13, 14 times next year's earnings, which is absolutely not expensive for a world leader. They're in a big product cycle. You know, in the more recent comments, Tim Cook said that their iPhone 6 sales in the most recent quarter, only about 15% of them went to current iPhone users, which means they're taking market share from everyone. You know, you've got the Apple Watch, which is just launching, and the jury's out on that, but the early days looks attractive. And then you look at their services business, which nobody talks about. That's the revenue that they get from the App Store, from Apple Pay, from their cloud services. 10% of revenues now at substantially higher margins than hardware and growing much more quickly. So as the ecosystem gets bigger and more people join it, it's very hard to leave. So we think if you think the consumer globally is growing and is liquid and has money to spend, this is a great company, and technically the stock looks very, very strong.
Let's spend some time here with DH Corp. We had the CEO on a couple of weeks ago when they made that deal to buy FunTech, I guess it was called, for over $1 billion. So a transformational deal there, another one a while ago. Tell us what you think about
right,
DH.
So key secular theme in this market is financial technologies. Banks did not spend money for a few years as they needed to. They are behind the curve. Some argue there's as much as $100 billion needs to be spent. DH took a business which was an old check printing business, and through acquisitions has converted itself into a financial technologies company. They've done it very effectively, cross-border, Canada and the US. The most recent acquisition that they made is in payments systems. They have 8 of the 10 biggest global banks as customers. They've just done a really great job of making acquisitions and then pushing out and enlarging their markets. So this is a play on the long-term spend on financial services technology, and they have lots of opportunity. And as a Canadian investor, to get that U.S. exposure, we think is very attractive.
Is this an underappreciated stock in the market?
I think it's not well known. I mean, there are some that know that this has been a tremendous investment for a long time. And we've been long-term investors. But I think that this is a relatively early stage story. They can continue to make acquisitions, and as long as they can execute, which they've had a track record of doing, you know, I want to back them as an investor.
Market cap of $4.4 billion and a dividend yield of 3%. Always good to get your perspective, David. Nice to see you.
Mark, it was nice to be here. Thanks very much.
David Burrows from Barometer Capital. Our thanks to him. Thanks to you for all your questions. Stay tuned now for Catherine Murray. We are leading up to the federal budget at 3:30 Eastern Time. That's when our coverage begins in earnest, and we'll have lots of budget talk throughout Catherine's show as well. Stick around for that. We'll see you later in the day. Take care.